If you thought trading boom and crash was hard, wait till you watch this video. Wait till you watch this strategy, right? So actually I use this strategy all the time, and as you can see, it's just moving averages. Why do I use moving averages most of the time, and why is it the best for me? Mostly I would say that personally I'm a BTMM trader, right? I trade with the market maker, right? That's my strategy. That's the like my core strategy. Of course I use price action and all that stuff, right? But my core strategy is BTMM. That's why I absolutely love moving averages, right? So I'm going to show you exactly how you can make money when trading, right? It's actually a very simple strategy that I'm going to be showing you. Of course, I won't go that much into depth, right? So that I make this very, very simple for you to understand. Because, of course, since you guys don't like even reading or studying, right, I figure that it's best if I keep things simple and straightforward so that you can make what? You can just make money using this strategy. I'm using what? 3 moving averages for this what? For this strategy, right? So let me show you what the settings for these indicators, right? So firstly, I've got this red line over here, this red moving average, right? That's the 13 moving average. And then this black moving average, that's the 50 moving average, right? And the purple, that's the what? 200 moving average, right? So you can also use the strategy on your phone, right? You just have to add what? Those indicators, right? So you just go on insert indicators, trend, right? And choose what? The moving average, right? The moving average, the first moving average, I said it's period 13. That's the what? Red one on my chart. The second moving average is the period what? 50. That's the black one on my chart. And the third and last is the period 200. And that's the purple one on my chart, right? And the method is exponential. Apply to close. And that's it. Set this up either on your phone or on your what? On your laptop, right? And let's jump into it, right? So what have we got here, right? So first of all, the first confirmation that you have to look for, I just want to jump straight into it, right? And I'm also going to show you how you use strategy to make you a lot of money, right? So first of all, when you enter, right, how do you enter? How do you know when to take an entry, right? So first of all, the first thing that you have to look for is the 50 and 200 cross, right? The black and the purple. Where are they? Where are they crossed, right? So right over here, the last cross for what? For a buy, right? When they cross and the 50 moving average is upward above the what? Above the 200, that's an uptrend. And if the what? The 50 moving average is below the 200 moving average, that's a downtrend, right? So this is an uptrend. Oh, okay. So like over here, when the 50 moving average is below the what? The 200 moving average, that's a downtrend, right? Like over here, yeah, right. So that's the first thing that you have to do, right? So that's just what the basic for market structure, right? After you know where the market structure is, where the trend actually is, right? So the 50 to 200 cross is just for showing you what the direction of the market, right? And the 50 and the 13 and the 50 moving average on their own, right? Without crossing each other or anything, they are just going to show you what the trend. And I'm going to show you what another trick on how you can actually use what the 13 moving average on the 5-minute time frame and the 1-minute time frame to make what, in fact, to maximize all your profits, right? So watch till the end, make sure that you don't miss out on that tip, right? And if you've got any questions, leave them in the comment section down below and I'll address them as soon as I can, right? So after a 200 cross over here, like over here, right, you have to what? You have to take your entries, right? So when do we enter, right? For entries, we're going to be entering when the 50. Mostly, I personally only enter when the candlesticks pull back to the 50 moving average, the black one. That's when I take my entry. And the 13 moving average, I've got another. You can also enter when it pulls back to the 13 moving average, but it all depends on the time frame, right? As I said, I want to keep this simple, right? I use it at times, right? It depends on the time frame that I'm using, right? I just want to keep this simple so that I don't confuse you guys. So let's just stick to using the 50 moving average for our entries, either the time frame or own, right? But you can also use the 13 moving average for your entries when it pulls back to the 13 moving average, right? So like over here, when it pulls back over here, just give it an allowance of 1 candle, right? If that candlestick closes, right, like over here, right? When it pulls back to the 13 moving average, you can take your entry, right? It pulls back to the 13 moving average, you can take your entry. pulls back below the 13 moving average, you can take what your entries also, right? As you can see, 13 moving average gives you even more entries than using the 50 moving average, because right away on the 15-minute time frame, you've got what, 1, 2, 3, about 3 entries that you can see over here, right? But when you're using 13 moving average, right after the 50 200 cross, pull back to the 13 moving average, you've got 1, 2, 3, 4, 5, 6, 7, 8. There are many trades, right? But when you don't want to use the 13 moving average for your entries, right? As you can see over here, I'm using the 15-minute time frame, right? So when the candlesticks pull back to the 13 moving average, you drop down to the 5-minute time frame, right? So let me highlight this zone, right, so that I can show you how this actually works, right? So let's drop down to the 5-minute time frame, right? So right over here. Right, so this is the section that we're watching on the 15-minute time frame. So over here, as you can see, we're going to be taking our entries on the 30 moving average. Is now the 50 moving average on the 5-minute time frame. So we will be taking our entries, right? So for my entries, personally, I use the 15-minute time frame and the 5-minute time frame. Those are the best, and I also use the 1-minute time frame also, but rarely, right? But the best time frame that I've noticed, that I've seen for boom and crash, is the 5-minute time frame. Why do I use the 5-minute time frame? Firstly, because your stop loss is going to be smaller instead of using the 15-minute time frame. Using the 5-minute time frame, get more entries, more valid entries, because on the 1-minute time frame you can get multiple entries, but most of the times they don't work. So the 5-minute time frame is the best, because it's like the average of both the extremes, both the 15 and the 1-minute time frame. So it's the average. We get multiple entries, multiple valid entries. So that's why I like using the 5-minute time frame, right? So on the 5-minute time frame, you're only going to be entering when the candlesticks pull back to the 50 moving average, like over here. Over here we got this small W, we enter, pull back to 50, back to the 50, you take all those entries, right? But of course you can do your own research, and if it works for you, you can also enter when they pull back to the 13 moving average. But that's when you have to do a bit of back testing, so that you see what works for you. I'm just going to jump back to the 15-minute time frame so that I can explain much better, right? So what do you have to do? Firstly, you have to look for the 5200 cross, right? Where is the 5200 crossed? Right over here, and it goes for what? For a buy. So you're only going to be looking for buy setups, right? And if they've crossed for a sale, like over here, the 50 is below the 200, you're only going to be looking for your sale setups, right? So over here, you enter when the candlesticks pull back over here, pull back to the 50 over here, you take all those sale entries. Over here, you're taking the buy entries, right? And then the trick that I was showing you, when do you use this trick, right? One thing that you have to know about 30 moving average, right? When you're using the 13 moving average on the time frame that you took your entry, right? So if you took your entry on the 15-minute time frame, stick to that, right? Use the 13 moving average on that time frame, right? Let's say you have entered over here. When the trend is very strong, it shows you if the trend is strong or not. When the trend is very strong, the candlesticks don't close below the 13 moving average. When the trend is strong, the candlesticks don't close below the 13 moving average, like over here. When the trend isn't strong enough, as you can see, the candlesticks are consolidating below the 13 moving average, right? But when the trend is strong, as you can see over here, there's no close below the candlesticks don't close below the 13 moving average, as you can see. So you could have held up until here, right? So you can also use the 13 moving average for your exit when you've got, so you just give it an allowance of one candle. Absolutely, let's say for this over here, when it pulls back below the 13 moving average and closes, this candle closes below the 13 moving average, right? If the next candle doesn't close above the 13 moving average, it's better you close that trade, because it's an absolute reversal. It's going to reverse for a while, right? So you close that trade. Same over here, it closes one candle below, next closes above, so you hold the trade. Same over here, and here it doesn't even close below the 13 moving average. Right over here, when it closes, next, and as you can see, reversal is quite deep, right? So you could have lost a lot of money over here. But when the trend is a little bit strong, there's no close below the 13 moving average, like over here. It's very simple to use this strategy. Leave your comments in the comment section down below. Leave your thoughts, right? Leave your questions also, because I want to go deeper on this pick, right? Using moving averages. So leave all your questions in the comment section down below, and I will make videos on those, because I'm sure that you haven't understood a lot of things over here. I just want to know exactly what it is, so that I can find how best it is I can help you guys.